Oil and gold are expected to capture the attention of commodity traders this week. For a look at the movers, we're joined from Chicago by Alan Nuckman, Chief Market Strategist at Agora Financial. Alan, always great to see you. Thanks for coming on the show.
Good morning.
Tell us, what are people saying about oil?
Well, there's two main focus right now for commodities. It's obviously, number one, the macro market. So we've seen an asset reflation, and it's not just been the stock market. That's also seen new breakout in the crude oil market and in the gold market. So talk about crude first. We traded between 50 and 55. If you look at the crude pattern, it's eerily similar to what we've seen in stocks through December and January. Now, so that breakout above 55 in crude oil, that targets $60, and also $60 is the midpoint of the drop from the top down to those extreme lows. So let's see where we can go there, but that's a macro story in the fact that the sell-off was mainly because of the concern that there would be slowing global growth in the future. Now, to get to secondly, let's look at gold. Gold also had a breakout here. Today we're up here at the highest level in 10 months, and I think a lot of that story is interesting because I've been looking for a last gasp in the dollar. The U.S. dollar made a new high on Friday but had a lower close, and it'll be interesting to see how can the dollar maintain strength, how can there be dollar power if we're not going to raise rates in all of 2019, and that's what the markets are telling us right now.
So gold obviously traditionally trades off the U.S. dollar. How would you suggest commodity investors think about the U.S. currency right now?
Well, I've been looking for a slow decline in the dollar. At least it stopped rising here for the last few months. But every time it looks like it's ready to turn down, it comes back. So I think that action on Friday, which took out the December key reversal top, is interesting to see what happens here this week. Like I said, it did make a high, but it wasn't convincing. It seemed like it's something it needed to do. Now let's see where we go from here. But with gold, you've got the dollar at its highs, you've got gold at its highs. So you've got a bit of a disconnect. If you look at gold, technically 1350 is the range top for the last 3, 4, 5 years, between 1350 and let's just say 1050. So a breakout above that could get some significant short covering. You know, there'd been a long time where we just kind of forgot about gold, and gold was just not a market that we were watching. So the fact that we've come back above the 1300 level and held that and powered higher to these multi-month highs since June, I think is a very positive sign for that sector.
Maybe we'll put up a 5-year chart for copper as a barometer for the metals. I mean, there must be a sort of a feeling, sort of like a draft on the back of people's necks, a worry about slowing global growth when it comes to taking a bullish position in metals.
Yeah, and that's the reason that we had the stagnation that we did. Now, your last segment, you were talking about my hometown. You were talking about iron ore. I'm from Upper Michigan, from the Iron Belt. So Cleveland Cliffs, and they're actually looking to open another mine. They have to decide whether it's going to be in Minnesota or Michigan. But you talked about that could be an interesting play as you look at iron ore and some of these basic metals. Copper's had a breakout. We saw what's happened today with Freeport-McMoRan. So I think the metals markets, the risk-reward got to a point where it had a bullish bias that after the big sell-off that look for those markets to come back, because we've already baked into the cake this global growth worry, and I think you're seeing the macro markets give us a better feeling that there's a little bit more, I like to say, optimism wins. I think there's more optimism in the long term. It's still growth, and the people were worried that the growth rate was slowing. So it's not like we were actually having a downturn. It was just a growth rate slowing.
That's interesting. You mentioned Freeport-McMoRan. I'm not sure if you saw this. Citi this morning upgrading Freeport and also upgrading our own First Quantum Minerals, Toronto-listed stock, reckons that it's risk on for the red metal. People are more comfortable with copper.
Well, it had been trading sideways, and it finally broke out to the upside. If you look at commodities in general, there are very few exceptions, but they tend to move with the overall market opinion. If you're back on to the risk-on mentality, that can make commodities a little bit more positive, a little bit more bullish. I think there's a lot of upside potential in a lot of these commodities markets, and some of these sectors that also could be the catalyst for the stock market. To get back to crude and come full circle here, there are a lot of energy stocks that haven't really participated in this bounce back that I think have a lot of upside potential. So that could be the sector that drives the stock market higher. Let's remember, coming into today, the Dow was less than 4% off of its all-time highs, and we had the tech sector 20% off the lows. So this is a big bounce and major comeback. But let's remember, we are in a bull market. Yes, December was ugly. It was a lot of unwinding, but that was really just giving back profits, and we've shaken that off. And every single time over the last 9 years that the market's had a sell-off, it's bounced back the distance of the sell-off on top of the old highs. If we have another V recovery, that targets 3,500 in the S&P, and there would be a lot of winners if that happens.
Always great to talk to you, Alan. Thank you very much indeed.
Thank you.
Alan Nuckman, Chief Market Strategist at Agora Financial.